Okay. So have you ever seen one of those get free crypto
Oh, yeah.
tweets?
Oh,
And you're like, is this legit or am I going to get like totally rugged?
totally.
AirDrops, right?
Yeah.
Today we're diving deep into Keyrocks' report on 2024 AirDrops.
Yeah.
We really want to break this down because, everyone deserves more than just like the basic surface level crypto advice.
Yeah, absolutely.
Yeah,
Like
yeah.
actionable insight is what we're after. Remember that whole like printing money meme from a while back?
Yeah.
I feel like a lot of these airdrops are kind of like that, just this temporary sugar rush, no lasting impact. And so this report cuts through all of that
Yeah.
and looks at what actually creates value.
Which is what we all want.
Exactly.
Right, not just the pump and dump. So Keyrock looked at a massive data set, 62 airdrops across 6 different blockchains, all from last year. And they really want to answer the question, can these airdrops actually build a lasting community? Or do they just incentivize people to, make a quick buck and leave?
Right.
And the results are pretty illuminating. 88%, a staggering 88% of these airdrops saw their token values just completely tank within months.
Wow.
So much for the Lambo.
Yeah.
But before we write airdrops off completely, the report actually found some really fascinating trends.
Okay.
Especially when it comes to the size of the airdrop.
Okay.
Well, it turns out bigger might actually be better.
Interesting. It's like this. Imagine if you get a tiny sliver of cake versus like a big satisfying slice.
Oh, yeah.
Which one makes you feel like you're really part of the party,
I'm going with the bigger slice every time.
Exactly. And that's what the report found, right? So the airdrops that were more generous, the ones that were giving away more than 10% of their total token supply, actually performed the best over time.
Wow.
Like they created a sense of ownership and community
Okay.
that the smaller airdrops just couldn't match.
So it's not just about the initial freebie. It's about giving people a real stake in the project.
Exactly.
Interesting. Now, something else that really jumped out from this report was this whole fully diluted value thing, FDV.
Oh, yeah.
For those in the know,
Right.
but don't worry, we'll break it down.
It's funny because it does sound kind of intimidating. Like, it's one of those terms that only Wall Street guys in suits throw around. But it's really not that complicated, honestly. Imagine, we're sticking with the food analogies, you baked a cake.
Okay, I'm following. I've got my apron on.
Let's say you cut that cake into 100 slices.
Okay.
The FDV is like looking at the potential value of all those slices if you sold every single one right now.
Gotcha. Okay. So if each slice sells for $1, the FDV of my cake is $100.
Exactly.
Even if I've only sold a couple of slices.
Precisely. And here's where it gets a little bit tricky with these crypto airdrops. Having a really high FDV at launch, that can be a major red flag.
So a high FDV means someone saying my cake is worth $1 million, even though it's just like a regular chocolate cake.
Right. And not only that, there might not even be enough people who want to buy a slice at that price.
Right.
That's the other issue with a high FDV. Often the liquidity or the actual money flowing around to buy and sell, it doesn't actually match that sky-high valuation.
So it's like saying my cake is worth $1 million, but I only have $10 in my wallet.
Right.
It just doesn't track.
It doesn't quite add up.
It doesn't add up.
Yeah, it's a recipe for disappointment, that's for sure. And the report found that the tokens that had those huge inflated FDVs at launch, those were the ones that saw the biggest price crashes.
Which makes sense because if something is already seemingly overpriced from the get-go,
Right.
there's less incentive for new investors to come in.
Exactly. It creates this vicious cycle where investors see this massive FDV and they think, where's the room for growth?
Right.
I'm out.
Totally.
And without that new influx of buyers, the price is much more vulnerable to, gravity.
Speaking of gravity, the report actually broke down which blockchains saw the most successful airdrops in 2024.
Oh.
And the result might surprise you. Out of the 62 airdrops that they studied, only eight saw positive returns after 90 days.
Wow.
And this was across Ethereum, Solana, BNB Chain, Starknet, Arbitrum, ZK-Sync. We're talking about the biggest players in the game.
Right.
And still, most of them didn't deliver for these early investors.
Yeah.
So which chains came out on top?
Well, even in a bear market, both Ethereum and Solana kind of stood out as the most successful chains for airdrops. But, 2024 was a tough year for crypto overall. So even on these chains, success is relative.
Right, it's all relative.
Yeah.
So why do you think those two came out on top? Was it just name recognition, do you think?
I mean, it's definitely a factor.
Right.
Ethereum has that OG blockchain status, and Solana, they've been gaining serious traction, especially with, like everyday investors. But to really understand what set these chains apart, I think we have to dig a little deeper into how these airdrops were actually structured, especially when it comes to size.
Okay, so let's talk about airdrop sizing then.
Okay.
This is like picking the right size life raft in a sea of crypto.
Yeah, and I think it's kind of like life rafts where bigger isn't always better. But in this case, the report actually found that it definitely helped. Remember, we were saying that like those airdrops, like over 10% performed the best?
Right.
Well, they actually dug into it a little bit deeper, and it gets even more interesting.
Okay, hit me.
So they actually split up all these airdrops into 3 different buckets. Yeah. Small, medium, and large, based on what percentage of the total tokens were given away.
Yeah.
And what's interesting is those small airdrops, the ones that were under 5%, they saw the most dramatic, like, price action, a really quick spike, and then crash.
Like classic pump and dump territory?
Yeah.
But why, though? Like, less supply, shouldn't that, in theory, take the price up?
In the short term, yes. Scarcity creates that's FOMO, right? But here's the thing. When you have such a small piece of the pie, most people aren't really thinking long term.
Okay.
They're just in it for the quick flip. They're not in it to actually use the token to build anything,
So it's like winning a $5 lottery ticket versus like getting a share of like a profitable business.
Exactly.
One is a quick thrill, the other is a potential future.
Now you're getting it, right? And so that's kind of what the report found with the medium-sized airdrops as well, the ones that were between 5% and 10%.
Okay.
They fared a little bit better, slightly longer burn, but still not really ideal for that kind of lasting impact.
Right.
And so it's really those, the big spenders, the 10% plus airdrops where things get really intriguing.
Okay, so the 10% or more, those are the ones that performed well over time.
Over time, exactly. And I think it challenges kind of some traditional, crypto thinking in a way.
Okay.
That giving away a big chunk up front actually led to this kind of more stable long-term growth.
Interesting.
And why is that? It goes back to that ownership mentality we were talking about.
People feeling like they're actually a genuine part of something.
Exactly. Exactly. Yeah. Think about it. If you get like a few crumbs from a cake, are you really invested in that bakery's success?
Right.
But if you own a whole slice, you're checking in on new flavors. You're telling your friends you're a part of that community.
Yeah. Makes me want to open a bakery now.
Yeah.
But for crypto. Okay, so we've got airdrop size down. We've got FTV. Didn't the report find like a pretty significant link between these crazy high FTV airdrops and the ones that like totally crashed and burned?
Oh, yeah, absolutely. Remember we were talking about like that mismatched foundation?
Right.
You can't build a skyscraper on sand. And you definitely can't build, a token with an inflated FDV and no liquidity to back it up.
Right. It's like walking into like a really fancy restaurant. You see the menu. It's like a $10,000 menu. Mm-hmm. And then you find out that they only take Monopoly money.
That's a great analogy, right? But that's essentially what happens with these inflated FDVs, right? Investors see this massive, this supposed valuation, and it's like, whoa.
Red flag.
Yeah. Especially when you consider most people, they jump into these airdrops because they're hoping for these early gains.
Right.
And so if it already looks like the price is, through the roof.
Right. They're going to look for opportunity elsewhere.
Exactly. And then that lack of buy-in creates this kind of self-fulfilling prophecy.
Totally.
The price, because it's not supported, it starts to fall. And then people panic sell, driving it down even further.
Vicious cycle, fueled by hype and unrealistic expectations. All right, so we've learned that the bigger airdrops in terms of percentage tend to perform better over time. We've learned that a massive FTV at launch is about as reassuring as a sinking ship.
Right.
What I'm dying to know is who got it right. Who are the airdrop all-stars that we can learn from?
Well, the report actually gets into some fascinating case studies, real-world examples of what worked, and unfortunately, what can go very wrong.
Okay, let's hear it. Give me an example of an airdrop done right, like a real success story.
One that really stood out to me was Drift.
Okay.
Decentralized futures trading platform on Solana.
Okay, yeah.
And what's interesting about Drift is they didn't just launch an airdrop into the void,
Right.
They had already built a really solid product,
okay.
Had a really dedicated user base.
So they had a real business.
Real business.
A real community before the airdrop was even part of it.
Exactly. Like they weren't just chasing the quick pump.
Yeah.
And they were really smart about how they structured the airdrop itself.
Okay.
They gave away a significant portion of their token supply, 12%, which, falls into that large airdrop sweet spot we were talking about.
Okay.
And they targeted their long-term users,
Right.
people who are already like bought into the Drift ecosystem.
So they rewarded loyalty
Exactly.
and actual engagement.
Rather than just trying to get those airdrop hunters just jumping from project to project.
Exactly, yeah, just chasing that.
And it paid off.
Okay.
Their token launched with a very reasonable market cap.
Okay.
Solid foundation.
Yeah.
And then post airdrop, their value saw a significant increase.
Wow.
It's a really prime example of how to do it right.
So it can be done.
It can be done.
It's not all just like, hype and then rug pull.
It's not all just a mirage.
Okay, so that's like the dream scenario.
Yeah.
But, you've got to talk about the flip side.
Of course.
Who represents like the cautionary tale in this report?
This one's kind of a heartbreaker, honestly.
Okay.
The report highlights Zekland,
okay.
a project that was aiming to be a big player in that like lending and borrowing space on Starknet.
Right.
Remember how we were talking about Starknet being like all the rage?
Oh, yeah. Everyone was trying to catch that Starknet wave.
Exactly.
So what went wrong with Zekland? Did they go too small on the airdrop?
It wasn't really the size that tripped them up. It was more like, everything else.
Oh, no.
They kind of got caught up in all the hype.
Okay.
Rushed their airdrop before the product was truly ready.
So it was all sizzle, no steak?
Pretty much.
They were basically just a website and a dream at that point.
Pretty much. And they attracted a lot of those like short-term profit seekers we were talking about.
Right.
The ones who just want to grab the free tokens and bounce.
Yeah.
But without that solid foundation, without a real reason for people to actually stick around.
Right, because once those tokens are unlocked, it's like...
it all falls apart.
It crumbles.
Exactly. And that's what happened.
Oh, no.
Their token value plummeted.
Wow.
Leaving all of those late stage airdrop hunters holding the bag.
Yeah.
It's a harsh reminder that you can't just slap an airdrop onto a half-baked idea and expect it to magically work.
Yeah, you need to have that foundation first.
Foundation is key.
So after this deep dive into the sometimes treacherous world of crypto airdrops.
Yeah.
What are your final takeaways for our listeners?
Yeah.
Any parting advice for those who are still tempted by the allure of free crypto?
I think the biggest lesson here is just to be discerning.
Okay.
Don't let that fear of missing out override your better judgment.
FOMO is a powerful drug.
Yeah, it really is.
Yeah.
So, do your research.
Okay.
Look for projects with real-world utility.
Okay.
Strong community.
Yeah.
Solid team behind them.
Those are all good things.
And remember, a generous airdrop can be a great sign, but it's not a guarantee of success.
Right.
Look beyond that freebie and ask yourself, would I be interested in this project?
Even if there was no airdrop.
Exactly.
Such a good point.
Yeah.
Don't chase that sugar rush.
Exactly.
Look for projects that are building something of substance.
Something you actually believe in.
Something you believe in, yeah.
Exactly.
Now, the report ends on this, really intriguing thought that I kind of wanted to get your take on.
Okay.
They basically argued that, statistically speaking, selling an airdrop token on day one is often the most profitable move.
Interesting.
Which I thought was fascinating.
It's true.
Because it's if everyone's doing that,
right,
does that undermine the entire point of an airdrop?
Well, that's the question, isn't it?
Right, which is supposedly to
to incentivize early adoption.
Incentivize early adoption.
To build a community.
Build a community, right.
Exactly. And if everyone's just cashing out immediately,
right,
it's what are we even doing here?
That's the point.
Yeah.
Yeah.
It's a question I think that, as the space evolves,
right,
we're going to continue to grapple with.
Yeah. It throws a wrench in the gears, doesn't it?
It really does.
It makes you wonder about the true motivations.
Right.
Behind some of these airdrops.
Exactly.
Is it really about rewarding early supporters, or is it just a clever marketing tactic?
Right. Are they just trying to boost those numbers, get that initial hype?
Yeah, something tells me this is a debate that's not going away anytime soon.
Oh, absolutely.
This is going to keep going.
This is the tip of the iceberg.
The Wild West of crypto.
Exactly. And that's what makes it so fascinating, right?
Yeah, it keeps us on our toes for sure.
Keeps us on our toes. It constantly challenges what we think we know.
Right.
And forces us to adapt.
Could have said it better myself.
There you go.
Well, that's all the time we have for today's deep dive into the world of crypto airdrops.
Fascinating stuff.
Big thanks to Keyrocks for providing the data and the insights for this episode.
Absolutely.
And to everyone listening, remember to stay informed, stay curious, and as always, do your own research.
Be careful out there.
Until next time.
Yeah.